Hey, what's up, guys? John here. The New York Fed has just announced that America is in very, very big trouble, but it's not here. It's not just in the West. The UK just announced they are now in recession.
The UK is in recession.
The UK economy officially entered a technical recession, marking the first time since 2012.
Japan just announced they're in recession.
Japan unexpectedly slipped into recession at the end of last year.
Germany just announced they're in recession.
Germany is likely in recession now as external demand is weak.
All in the last week. And this morning, China just banned short selling stock and being able to sell your stock. So you start to look at what's happening. This is a house of cards on the global economy. And inside of this period of reckoning that we're walking into, I believe we are going to start to see a lot of wealth transfer hands. A lot of opportunity is going to be seized by those that are smart and savvy enough to take advantage of it. Because that's what's going to happen. Happens in every crash. Look in 2008, 2009, the stock market bubble, the 1970s, 1929. Every single major event, there's always a buyer on the other side of that deal looking at things saying, you know what? I'll pay this because, not many other people are willing to buy. Because in periods of massive fear, everybody gets scared. Everyone pulls back. They don't know what to do. But the smart always know what to do. They understand value. And we're walking into a period where there's going to be these opportunities. I'm seeing this right now in the auto market, for example. You're seeing brand new cars. 2024 cars already getting repossessed.
Car repossessions are on the rise as drivers across the country fall behind on car payments.
Auto repossessions are expected to climb this year now that consumers no longer benefit from more lenient lenders and stimulus programs.
Millions of cars are about to get repossessed. Millions of homes are about to get foreclosed on. I'm going to break this down and show you the facts and show you exactly what's going on. You tell me, what do you think is about to happen next? Please hit the like button, YouTube, share the content, educate more people about what's going on in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. If you have big goals, make sure your credit score is in line with your goals. Take a look at this. So, Federal Reserve Bank, New York. Total household debt increased to $17.5 trillion. The latest quarterly report on household debt and credit shows, led by mortgage balances up $112 billion to $12.25 trillion, and credit card balances up $50 billion to $1.13 trillion. Delinquency transition rates increased for all types of debt, except for student loans. Even though it's student loan debt, you have borrowers defaulting. 40% of borrowers not paying their student loans right now. For credit card, auto loan borrowers, transitions into delinquency are above pre-pandemic levels. Now, the average household right now, the average American, has $103,000 in debt. And in Washington, the average person has $180,462 in debt. Now, for context, mortgage balances shown on consumer credit, this is on New York Fed, mortgage balances showed on consumer credit reports increased by $112 billion during the fourth quarter of 2023 and stood at $12.25 trillion at the end of December. Balances on home equity lines of credit, HELOCs, increased $11 billion. Now, for context, HELOCs are exploding on Google Trends right now. And you might say, well, what is a HELOC? Well, it's an emergency source of funding, right? That's what it is. People get a HELOC when they have to get a HELOC and they really need it. What is the interest rate on a HELOC right now? 9.09% is the interest rate on the HELOC. So you start to look at how bad this situation must be for so many households to start to, lean into this type of line of credit. Now, what they say here is the seventh consecutive quarter increased after 2022 Q1, and there's now $360 billion aggregate outstanding balances. Credit card balances, which are now at $1.13 trillion outstanding, increased by $50 billion, 4.6%. Auto loan balances increased $12 billion. Now look at what's going on in the auto loan market. This is absolutely crazy.
Cannot keep up with the repos. Look at some of these cars. These are 100,000 plus MSRP cars that get repoed because people can't afford them anymore. Well, rich people can't afford them anymore. So what do you think is going on with the average people?
20,000 likes, right? 20,000 likes in this video. This 177,000 likes. And look at this.
Stop buying cars that you can't afford. Look at some of these repos that I found at auction today.
Repo with temp tags. This thing is a 2024. Look, 2024 BMW Financial. So I'm not making this up. Dude didn't even get to finish his drink and took his Walmart bag. Look at this thing. How many miles are on it, I wonder? Let's see. It's got 218 miles.
Like all these fancy cars you see on the road, most of them probably have a huge loan on them. And I mean, when I say most, I mean this thing went super viral, by the way. It's like everywhere. You have the average loan to value on a car is 125% loan to value, right? So they owe a lot more on their cars than it's worth. And 100 million Americans have cars or car loans. And when you have 100 million Americans with an auto loan, and many of these people bought cars in 2020, 2021, 2022, when the PPP stimulus, the EIDL loans, money was flowing everywhere, record low interest rates. A lot of these people are probably underwater. I would bet tens of millions of people are underwater on their cars right now. And so when you look at what's going on here, you can see things very, very clearly. That unless the economy starts to boom, you're going to see millions of people walk into a period of financial distress. And according to Jerome Powell, CPI report, inflation report, the unemployment numbers, they thought 185,000 jobs to be added. It was 360,000, right? What's going to happen? Interest rates are going to stay higher for longer, and you're going to start to see Americans start to bleed out. That's what's about to happen here. The upward trajectory has been in place since 2012 or 2020 Q2 and now stands at 1.61 trillion. Other balances, which include retail and other consumer loans, grew 25 billion. Student loans were effectively flat with 2 billion increase and stand at 1.6 trillion. In total, non-housing balances grew by 89 billion. So, look at this. This is where we're at. 2 days ago, Germany likely in a recession. 1 day ago, Germany likely already in recession. Germany likely in recession, right? Then you look at the UK. UK shows sign of recovery from a mild recession, right? Bank of UK says modest in historical terms in the upterm. BOE risk deepening UK recession. To retrieve Britain from recession, the next government must get growth right? So recession. Japan unexpectedly slides into recession 6 days ago. All in the last week. You have to ask yourself, what's going to happen next, right? Cathie Wood, ETF sold Coinbase's, Cathie Wood sold 150 million in stock in the last 3 days. China bans major institutional investors from selling stock at open or closed and plans to track who is shorting. So you start to see all these changes happening. And then you look at what Bezos is doing. He just sold $8.4 billion in Amazon stock in 9 trading days in February. 8.4 billion. And it's shocking. Like insiders at Microsoft sold 76 million in stock 4 hours ago. Insiders at Dorian G sold 4 million in stock 4 hours ago. Insider buyers lose additional US 63, don't ignore the insider trading at 19 hours ago. Lockheed Martin insiders sell 9.2 million in stock 1 day ago. So you start to look at a lot of insiders are selling, right? There's 10 pages. Look, I'm curious. Let's see how many people in the last week. Johnson & Johnson, 5.6 million, possible signaling caution. All these different companies, still 10 pages in the last week. Now, let's just see in the last 24 hours. Insider trading, right? 8 pages. So, you look at this, to me, when you have the smartest people in the world, you have Bezos, the wealthiest people, you have a lot of these insiders at some of these really successful, powerful corporations, all liquidating stock quietly, and you start to connect the dots here. You can see consumers are in a really, really bad position. And the New York Fed, when they come out saying that delinquencies are skyrocketing, and you start to look at where people are, a lot of people are leaning on payday loans, installment loans. They're doing everything they can do to try to keep this together. And that's what I think is generally what happens right before the breaking point. I think we're going to start to see insurance continue to rise on homes, property taxes continue to rise, layoffs continue to grow, and it's going to push a lot of people off the edge. What do you think about this entire situation? Do you think we're walking into a scenario where we are going to see inflation get worse, where we're going to see insurance and taxes get worse, and we're going to see the cost of living grow? Right now, Wall Street Journal, they came out and said, it's been 30 years since food ate up this much of your income. Ongoing high costs led to food manufacturers and restaurants to keep prices elevated. The last time Americans spent this much of their money on food, George H.W. Bush was in office. Terminator 2 Judgment Day was in theaters, and CC Plus Factory was rocking on the Billboard charts. Eating continues to cost more even as overall inflation has eased from the blistering pace consumers endured throughout 2022 and 2023. Drop below. Let's have a conversation about this. I personally think inflation is going to get worse, and I think consumers are going to be forced to sell and walk away from their cars at rates in which we've never before seen, their homes, their rental properties, and their Airbnbs. And I think we're going to see a lot of smart and savvy investors in America and overseas take advantage of massive opportunities, because there's always winners and losers in every transaction, and of really big transactions right in front of us. Drop below. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video and schedule a free strategy session for tomorrow. And I'll catch you next video.